Hello, and welcome to this FStech webinar on data as a driver of insurance innovation, sponsored by Endeavour. I'm Hannah McGrath, editor of FStech, and today I'm joined by an expert panel to delve into the key challenges and possible solutions for insurers as they look to leverage their data to deliver next generation services across digital channels and platforms. And to do this, I'm delighted to say I'm joined by a panel of experts in this field. They are Timothy van der Worteen, head of data analytics at Ageas Group. We then have Jantana Kamra-Kamroy, Chief Executive at Tapley. Then we have Anita Fengqvist, who is Chief Data Officer at Zurich. And finally, Daniel Robinson, Delivery Partner at Endeavour. So before we jump into their insights on this topic, I'd like to set the scene for our discussion. Insurers have more data than ever before, but it's not necessarily how much data your organisation has that matters. It's how effectively it can be used. However, the increase in data volumes and rising complexity of the past few years haven't been matched by improvements in IT infrastructure or hiring of skilled workforce. AI, machine learning, predictive analytics, and automation are fast providing customers with the next generation of personalised insurance services, but many organisations are lacking the data quality, visibility, and data access needed to make end-to-end digital transformation a reality. In addition, many are burdened by data silos spread across disparate business units, including claims, policy, pricing, and finance, and this creates a bottleneck to agile operations and seamless customer applications. As a result, a dysfunctional relationship with data inhibits the benefits of big data and puts the brakes on efforts to provide innovative and personalised services for customers, with more agile new entrants only too happy to step in and save the day. So in this webinar, we're going to explore the ways in which insurers are using data to drive digital transformation and create new value for customers. So without further ado, let's jump into the questions for our discussion. And as we go through, I'll add a bit of context to those questions. So our first question is, what are some of the key challenges for insurers in harnessing their data to create next generation services? And for that, I'd first like to go to Anita at Zurich.
Sure. So I suppose our rich legacy as an insurer is our biggest strength and our biggest weakness. So first key challenge is simply the sheer volume of data. We've been collecting data since 1872, so 149 years worth of data, 215 countries, 55,000 employees. That's an awful lot of it to wrap our heads around, particularly when you think about composite insurers and the sheer number of products. Secondly, the variance of data, different data sets, different data solutions, very varying data qualities, definitions, etc., makes for a real challenge when we're actually trying to harness that and really, again, get our arms around it. Prime example would be the definition of a property. Is it an apartment? Is it the apartment building? You end up in really claggy conversations. And lastly, cost. Years of underinvestment in data means that actually the underpinning foundations aren't always there. So ultimately, it's absolutely critical for us as insurers to have a really, really clear data strategy and build on that. But there's a lot for us to get our hands around.
Yeah, absolutely. Thanks so much for that, Anita. And, obviously a huge kind of legacy there, both of data and in terms of customer relationships. And that's a lot to manage when you're transitioning everything either to cloud or, just looking at data transformation. It's a huge, huge challenge. Thanks very much.
Hugest opportunity and hugest challenge, yeah.
Yeah. Fantastic, thank you. So Timothy, you head up the data analytics platform at Ageas. Where do you stand on this question?
Yeah, so I think the complexity in insurance has more to do with indeed our legacy. When we think about data and what to do with it, I think that the first question is always how can we make the life of our customer better, and how can we actually be a good service provider for this next generation of applications. And there the legacy is that in the past we used to work in a way where you had these insurance brokers and people go and talk to them. They get advice about what type of products they need, how to do their claims, all those little questions of, I don't understand the legal text, can you help me? So those were handled by literal people who are experts in their field. And people were happy with it. Up until 10 years ago, there was nobody asking for, hey, make this process digital, or hey, replace these brokers. It worked fine. And the problem there is that this is not a digital process. So even though we are a large business with high volumes of history and data and how to take care of our customers, it's very hard to translate this information and this knowledge into a digital asset we can build upon and we can actually do data analytics upon. And I think that's one of the biggest challenges of the last 10 years is how fast and how wide this new adoption and transformation has to be.
Yeah, absolutely. Thanks for that, Timothy. Yeah, the idea that, your data needs to be in the right format, the right quality, and, then to be fed into the right systems in order to get those analytics to work properly. There's no point, throwing money at that technology without making sure, as Anita said, that the underpinnings are there. So thanks very much for that, Timothy. Jantana, do you have anything you wanted to add to that question?
I think Anita and Timothy have covered quite a lot, but just, I can add around data transfer.
Mm-hmm.
I think one of the biggest challenges for data transfer, especially in the kind of organization where you have collected data for many, many years, would be the inconsistency or the compatibility of the schema or the unique reference, where you can identify the data set when you transfer to another department so that it could be easily reconciled. I think that's something is important for larger organization where you may not actually have the right the right way to map each individual data set that being transferred from one department to another.
Yeah, absolutely. So, ensuring that data sharing is seamless, that, it's the silos, it's both the sort of the organizational silos, but the data silos as well. So thanks so much for that, Jantana. So I'm going to move on to our next question. What strategies can insurers use to manage disordered data and break down silos to drive digital transformation? And for that, I'm going to go to Dan from Endava. What's your take on that?
Yeah, so I look at this top down, and I think, first of all, a lot of the silos that we see in data are reflected from the silos that have existed in the organization and its structure. Lots of insurers have come together through lots of aggregations of different businesses and have never truly been integrated. And sometimes the organizational structures still fit that pattern. I think also as kind of data science and the real understanding of the value of data have grown, it's grown in pockets in the organization. For example, the pricing and underwriting team may have done their own thing. The marketing team's done something a bit different. And then claims, again, have got their own analytics function. So these things have grown separately, organically. And the real challenge and also the real value comes in building the collaboration between those areas. And from there, building ultimately a data strategy that starts to go from where you are now to that future state. So, it's obviously the organizational side of it that makes this hard. Once you've broken down those people challenges, then the technology follows.
Yeah, absolutely. And Jantana, do you have anything? You touched on this a bit earlier, but anything to add in terms of breaking down silos to drive digital transformation?
Yes, I'm just going to build on the data transfer, of course. It's all about having it's all about realigning your data hierarchy so that it could be easily transferred. So having consistent schema across, like your organization will help you with that data transformations, but also allowing the way that you collect data in a consistent manner, and having some sort of process to be able to produce, collect, store data in a more consistent way will help.
Yeah,
If
absolutely.
I can just jump in, Anna, I guess
Sure.
One of the things that I guess isn't a surprise for a lot of people, but probably it was for me when I first started getting more closely involved in data, was just the absence of some of the absolute fundamentals, things like data dictionary that spans the organization, one definition of the same set of KPIs used in the same way across an organization. Getting to that in itself, with a big insurer is actually a huge amount of work. And it's not what I call kind of sexy work. It's very difficult to demonstrate the value that brings quickly, but it's absolutely the foundation of everything else that goes after it.
Yeah, absolutely. I mean, Timothy and Anita, you both work in large organizations. Do you have anything to sort of add into the mix there in terms of, working between different parts of the business, I guess, in terms of joining up that data?
Yeah, I think the big aspect there indeed is there's such a large amount of work to be done if you want to make everything, as we would say, clean and everything purely documented in the same system, in the same structure. And the amount of work, I think, is so large that probably we will never be finished. By the time we're done, there will be other things already there. So we need to really prioritize what to do first and which metrics are key to us, and then focus on those processes first so we can actually start to drive business and hope the rest will change and adapt and come along with it. So the example you gave of there are certain KPIs that they have the same name, but they're measured in wildly different ways across departments.
Mm-hmm.
The big question is, okay, do we need to change this metric because we want to have it nice on a piece of paper, or do we need to change this metric because it can improve our business? And our business, does that mean it's from an operational excellence point of view, or it's from a customer satisfaction point of view? These are all things we need to take into consideration before even starting to think of maybe we should spend 3 weeks to clean up this KPI. And that's how we aim to tackle this issue. Because otherwise you just drown.
We don't want anyone drowning in data. But I think you're right. You know, this idea that it's an ongoing process. Anita, I heard you sort of jumping in there. Is there anything you want to add on to that?
Yeah, I mean, I think ultimately it's a cultural point, isn't it? An understanding for why it matters and where these things are going and which desk it's going to land on. You've not worked in data unless you've spent months trying to reconcile two numbers that should be the same and aren't, and everyone's trying to figure out why and what sits behind it, and part and parcel for the role. But actually, I think, you know, top down, having buy-in to what we're trying to achieve and where we're going with it can drive understanding and then start to remove some of those challenges. It's never going to be simple because, as you say, there are multiple functions all trying to solve problems, but it goes a long way towards it.
Absolutely, it's having sort of that unified strategy by the sounds of it. You know, it's a top-down approach, but it's one that actually has to be used by every single sort of department and adapted to their function. Really interesting. So why do data silos emerge within insurance businesses, and why is it so challenging to create this single point of truth across the organisation? Timothy, what's your take on this single point of truth, and is it something that's ever really attainable?
So, if you talk about silos, indeed the correct question is, how did we end up here? Why did we create silos to begin with? And the honest question is, this was, if you think about one insurance product, the most efficient way to run it is just to take care of this one insurance product. It's in software engineering, we always like to talk about separation of concerns. So just code all the complexity you need and don't try to think of the outside world. That's a bit how those insurance silos ended up. It's classically, you have the life, non-life, property, all those things are separated because they did not need to concern with the others. And it makes total sense if you think about how an insurance company looked like 20 years ago. But now indeed you have a client who expects to be able to open up an app or open up a web portal, sees a nice overview of all his insurance products, be it bought from a broker, from a bank, maybe they switch partners, or they switch households, or they switch addresses. And we need to aggregate all this into a single point of view. And then it becomes really an issue of, okay, is this the same person in my database? Is this other line or not? And that's the fundamental question, and one that is very time consuming, but so much worth the effort to do it right.
Absolutely. I guess it's a big job for anyone that actually has that on their plate. And Anita, I mean, I don't need to ask you about how data silos emerge. You talked about the legacy of your business, and, you know, the fact that you have a legacy, both technological and sort of customer, dating back decades. Why is it so challenging to create a single point of truth across an organization, especially one of your size?
Well, I mean, I think ultimately, you know, these things happen because we have passionate, dedicated teams desperate to solve problems and solve them really, really fast. So actually data silos emerge through need. And it's that real balance between the need for speed and the ability to innovate and get something out to market fast versus considering, you know, as Timothy was saying, in aggregate, what we need as organizations. So building a, you know, single solution that meets all is slower, it's more painful, it's costly. Approving the return on investment can be a challenge, and actually it makes sense. But I think really what we need to do is define two-speed approaches that allow us to both continue to iterate fast, evolve, innovate, work with our customers in mind, and then make sure that in parallel to that, we are building and maintaining solid foundations for the future. And you know, some of these deals can happen so fast that there is a need to get live, but also we don't know today what data we might need in future. And in fact, if we look back to 1872, there's data that we may wish we'd collected. So I think that the answer is both trying to get at a single view, but also well, a single view is probably not the right word, but close to an aggregated view whilst also being realistic.
Yeah, absolutely. And I think that point, that really important point there of making sure the data is being collected as you go along so that it can be used for analytics projects, so that you can improve, the way that the business works, but also on the front end, how these products work for customers. And obviously that's really important, as Timothy mentioned, as everything goes online, digital channels, people want to access on their phones. It's all changing very rapidly, and the underpinning of that is data. So Dan, do you have anything you wanted to add on anything you've heard there?
Yeah, I guess the thing I'd add is that I'd really just build on Anita's point. So we all operate in the context of a change budget, which is far less than the desired portfolio. There's always compromises that need to be made, and that balancing of short-term wins, landing the new partner and getting that live, for example, versus the longer-term investment in kind of a more robust data platform. There are always going to be difficult conversations. So I think it will always be a compromise. But as Anita's saying, I think that idea of 2-speed or 3-speed or 10-speed delivery is really important. That the challenge is making sure that at a point in time, you bring the tactical delivery back in line with the longer term strategy, if that is the right decision to do. So I guess it's just that broader context that says that there's never going to be enough money to do this properly. There's always compromises to be made somewhere.
Yeah.
I think your point's correct, Dan. And actually, we very much use the short-term need to propel us forward on the long term. So every time a tactical need arises, actually, how can we make sure that it either doesn't detriment the data landscape, so it's either neutral, or we use it to propel us forward. And through each of those, actually, we can build a really solid, future-proof data estate whilst meeting that short-term need.
Yeah.
Yeah, absolutely. And thanks so much for that, guys. How are insurers ensuring that they have a sufficient level of data quality for machine learning and AI-led systems? We touched upon this earlier. Obviously, if you want to feed data into any of these sort of advanced and automated systems, it needs to be of the right quality. How on earth do you go about sort of solving for that? Jantana, what's your take on that, and how do you do that?
I think for most incumbents, just like what Anita mentioned, that they have lots and lots of data. So data is not an issue, is the quality of it, is the formatting. Obviously, we want digital data as much as possible in the most structured way as possible so that it could be easily processed by AI and machine learning. So that is basically what, we can ensure is to convert absolutely every single data that you get into a digital format and make it in the format that it could be easily transferred. Another, of course, way in which you can ensure that you got a good enough quality data is to buy the data, get it from someone else who already have those access of data, or collect it yourself, which could take a little bit longer. But if you have, large enough resources, big enough team, you can actually like scrap the data, get it from open source, and have your own data set that you can use. So that is kind of the, I would say, 3 main way in which you can ensure that you've got enough good quality data.
Yeah, absolutely. There's a lot of talk at the moment about sort of training data and synthetic data, how that works, and also the complications of anonymizing data and to comply with, all of the different restrictions there are around, understandably, around sensitive financial data. But it's a really interesting sort of process of trying to model those things out quickly, as Anita was saying, but doing so in a way that, it kind of generates the results that you're looking for. You have to go into these projects with an idea of what the results you want to be. Otherwise, it can just get very unwieldy and big quite quickly. So what's your take on that, Anita? How are you ensuring sufficient levels of data quality for these more automated systems?
I think 3 things. So data quality inevitably is a huge challenge. First one, it comes back to culture. So an understanding from the entire community of the impact that they have on data day in, day out. We talk about data professionals, but actually in insurance, everyone is a data professional, whether or not they know it, whether or not they like it. So engaging with communities to understand the impact they can have. And we found actually fun ways to feed back on things we found. We had somebody who was an underwriter who renamed themselves Darth Vader. So actually saying, we know what you're putting in the system because we can see it. When we see cars with 15 doors and you think, okay, we've probably not invented a new vehicle type. So So, but actually bringing people into it and bringing some fun into it for them to realize that actually it is a case of rubbish in, rubbish out, and they really have a bearing and can fundamentally drive the organization forward by helping us with it. The second is working at source. So profiling the data, understanding where the issues are, plugging those gaps, be it by actually going and fixing them, or as you said, by external data. So actually augmenting that data with more accurate, more granular data than we have internally. And then thirdly, operational processes. So there's the opportunity there to review, clean up our processes, automate where it's relevant to make sure that the accuracy is actually not linked to human error, but actually we can get that right in the first place, and fix fields to make sure that if someone wants to be creative, that they're putting Darth Vader in the field that doesn't matter and not one that we really need. So ultimately, I think all of that comes down though to fundamentally understanding why it matters in the first place and being passionate about it.
Absolutely, yeah, and it sounds as though you and your team are very passionate about this kind of thing, and I think this idea that everyone is a data professional. Timothy, I saw you smiling there. Is that the approach that you guys try to instill in the teams at Ageas?
We actually try to avoid the problem, if that makes sense. So what we feel, or what I used to feel in the past, is that a lot of teams are hesitant because they think, oh wow, my data, indeed, we don't really understand everything that's in there. We know they come from different source systems. We have trouble matching them up ourselves. We should not do data analytics before we fix this. And the message I kind of want to give is, don't be afraid to at least give it a go, just be pragmatic. If you somehow can at least guarantee the stability, so that your data always comes in the same format, at least, even if it's a bad format, at least you can start working with a team of engineers to make something out of it, to set up some sort of pragmatic pipeline to at least extract something out of it and start doing something. And if you have something, it's easier to improve upon than just delaying it until you have the perfect data set. Yeah, we just try to start pragmatic, but the subset of data that we deem to be acceptable from quality and grow from there.
Right, okay, so it's a question of sort of looking at it, being realistic and pragmatic, as you said, and just kind of sort of doing it, going ahead and hoping, almost hoping for the best, but knowing that at least you're starting from somewhere. Because my sense from you is that it's such a big problem, it's such a big challenge that you have to start approaching it somewhere, otherwise you would never start. Yeah.
Even the worst data sets still have the benefit, because they force you to rethink the business process. They force you to at least have a data compliant business process. And then it's very easy to iterate on such a thing when you start capturing the incoming data and track what it should become as output, and you can track your predictions. It's a lot easier to do it this way than, as I say, you wait until you have critical mass and then only start thinking of this data aspect.
Yeah, absolutely. And thanks very much for that, Timothy. And Dan, what's your take on this? Yeah,
so I mean, I agree with everything that was said. I think we shouldn't forget how little most people know about data. I guess they kind of to set some context. So the average reading age in the UK is I think something like 9. So if you translate that to then how many people really understand data, it's a very small number. Most people, if they see someone using VLOOKUP and pivot tables in Excel, they think they're a data scientist and a guru. So there's a massive distance between your data scientist in an organization and most other people. And I think there's massive value in raising that level of understanding, as we've been talking about there. So yeah, I think there's a bigger cultural and education point that comes through. I think the other thing for me is just demonstrating to people how big a commercial impact getting data right or wrong can have. We go from underpricing and overpricing, we get capital positions wrong, actually major either challenges or benefits depending on the data that somebody's inputting somewhere. Bringing those to life, I think I've seen being really, really powerful.
It's a really good point, Dan. We've used examples as, I think there was in the news recently, a local council had some test data that went through to their main system and had accidentally rejected planning applications, and actually they were legally binding, so it's cost absolutely millions, or will cost millions now in sort of legal to sort it out. But examples like that are really great to drive home to people in a non-insurance context why it really matters, and actually the true impact it can have when the wrong data gets into the wrong hands.
Yeah, absolutely. I mean, I think, that this is the problem with sort of test data, or people not understanding the consequences of putting data into a system which perhaps isn't in the right format or in the right quality. And certainly in that case, I think anyone who's read BBC News in the past few weeks will agree. So how is real-time data, and this is a question which is more broad about sort of risk management, I guess, how is real-time data enabling insurers to react to events such as extreme weather, which we've seen a lot of this year, and pandemic-related disruption as well? Timothy, how are you guys using real-time data to try and inform your risk management of that sort of event?
Well, the definition of real-time data is a tricky one in this point, because for an insurance company, typically we work on a day-to-day basis, so we have stuff that runs once a day. So real-time could be anything that goes quicker than a day in our definition, to put it very soft. It's not that we try to respond within seconds to alerts, but more within, say, hours. So that gives us a lot of technical lowered complexity to actually put system in place. And it could be, for example, that if we know that a flood is going on somewhere, or worst case is a tornado or a heavy hailstorm, we don't really, at this point of our the way our policies work, we don't really need something to respond within seconds. But what we do need is to have the proper framework in place to query our system. Okay, who is impacted, based on either geography, based on coverage, based on all the type of event, and then we can quickly respond to maybe set up a quick campaign to call people in the affected areas or send text messages. And the way we try to deal with real-time data is to more have this infrastructure in place. So if we have a signal coming from anywhere, we can respond to it. And we have this communication channel to our clients to convey whatever message we deem is important, or to set up a pre-formatted claims document that says, okay, there was a flood in your area, here's an email, click this link to file a claim. That's something we're trying to do right now. But actual real-time data, as it's usually used in the more technical leap of the companies, like Facebook and Netflix of this world, where we react to things within seconds. That's not something I think has, at this point in the insurance industry, a very big impact on the business.
Yeah, that's interesting, this sort of instantaneous sort of, feed of data, which then automatically triggers automated processes. I think, as you mentioned, it takes a bit longer. And I guess that's because you have to make sure that the policy on the response is unified across the business, and that you have the right teams in place to deal with these kind of events. And it's interesting as well that you're sort of dealing with this proactively, actually going out and sort of alerting the customers to the fact that they could be affected, and then using all of the digital channels that you have at your disposal to inform them of where they stand.
So the advantage you have when thinking of it this way is that if you don't need to respond within seconds, we can actually have a human in the loop to verify what's going on. That gives us so much more possibilities, or so much more confidence than having to trust in AI to take split-second decisions on events that maybe happened once in a decade, that are very hard to train for anyone.
Yeah, exactly. I think if there's something that we've all learned in the last year, it's that the unexpected most certainly will happen. I think insurance companies spend a lot of their time thinking about that sort of thing, but no one could really have predicted what's happened in the past 18 months. So thanks very much for that. Anita, is real-time data a reality for you guys? And how do you deal with this kind of sort of unexpected or extreme event?
It's interesting. I think there's a lot of hype around real-time data, and we'd certainly give ourselves a hard time for the fact that in insurance, there's a blend, there's a need for both, but ultimately we are also still working with areas where might have data quarterly, monthly. We've moved to daily, which is fantastic. So to Timothy's point, actually sometimes real time, maybe daily. There's times where we've congratulated ourselves for solving problems that were born in the 1980s. But when I talk to other industries actually and challenged them on what they're doing, I found that actually out there they're grappling with the same problems. So I think we're tough on ourselves as an industry. That said, though, the next question is, are people ready? So we've got examples where we're using Internet of Things to be monitoring humidity, damp, ultimately be able to predict damp and mold in buildings, etc., which is has fantastic application. if the third party you're sending it to is taking your real-time leak sensor information, but they're printing it out and sitting on a desk, and then a week later they review that printout, then you just got to make sure that all parties are ready for that level of technology. But I think one point that, that's a point of real value and pride is we've got an example in telematics insurance on the car insurance side, where the car was able to ping directly when there had actually been an incident. As a result of that, the family member was at the scene of the accident before emergency services.
Wow.
Which shows that actually it's, there is absolutely real application. It can add real value to individual customers really at a time of need. And also, as Timothy was saying, around flood prediction, etc., it absolutely has a place. So it's an exciting area, and I'm sure we'll see more of it.
Yeah, absolutely. Some incredible cases there, and that idea that real time, or at least on the day, and within the hour or something like that is the next level of insurance services, and using digital channels to enable insurers to communicate with their customers, I think is a really interesting one. And Jantana, in your insurance business, you do sort of, as you describe it, insurance on tap. You sort of it's micro insurance essentially for startups and growing businesses. Do you use real-time data in order to sort of adapt your policies and the pricing?
Yes and no. In our line of business, real-time data doesn't have that much bearing on the way we price risk, not as much, purely because we are an MGA, and a lot of our underwritings and pricing have to be approved and agreed by the underwriter. So that process takes time. So we can never really use real-time data to be able to impact our underwriting decisions. But what we have seen other line of business use, for example, in kind of motor space, real-time data or customer behavior, for example, using telematics, could be used to help and prompt drivers, when they drive badly, or it could be, like kind of used by claim handler to detect and validate claim, for example. So there are kind of a lot of real usage for real-time data. In our line of business, on the other hand, what we use real-time data for is to help us understand customer better. So it's more like customer profiling, to help us adjust the contents and our contents and information about our product for the users. And also it's help us reduce some of the marketing spend by being able to target customer that are most suited for the product that we are selling, and things like that we use quite a lot.
Absolutely. So it's that idea of sort of using enriched data sets to better inform you and to help you to target, who would benefit most. And as you mentioned, these use cases, and as Anita said, these use cases are coming online. They tend to be, in sort of at the moment quite a restricted number of areas. But real time, I think, is the next stage of this insurance. And certainly companies like yours that offer that almost like short term or time limited insurance policies. I think that sort of flexibility is something that feeds into that conversation around real-time data. It's really interesting. So Dan, what's your take on this? Is real-time data a possibility? Is it a reality? And how do you work with insurers who are trying to respond to these kind of unexpected or extreme weather events?
Well, first of all, it's definitely reality. We've had some great examples there. My favorite example is car insurance telematics, because that's what I've been closest to, and I think I guess one of the challenges with real-time data is you can't not know what you know. So if you've got real-time data that shows that there's been an accident or there's been a house fire, for me there's immediately a moral obligation to act on it. And that's actually quite a challenge, because that's not always easy to do. But I think the idea of having multiple speeds here is, as we kind of touched on before, is the right one. As we've said, not all data needs to be real time or near time. Sometimes actually daily, weekly is enough. I think the right thing to do is to focus in on the right use cases, and sometimes that means building a capability that either sits in parallel or sits with a third party in order to manage that real-time data in a slightly different way. And I think if we look across the insurtech landscape, and actually lots of those are working with more established insurers, and they're doing that in parallel, because actually they cut through that legacy noise and they get to build something from scratch. So yeah, it's here, it's happening. And let's be honest, if we look outside of insurance, it's all around us. We've all got smartphones generating vast amounts of data about us. We probably haven't got the right use cases and applications yet in insurance to make full use of that, but I'm pretty sure they're coming, and I'm sure there's an InsurTech around the corner that's going to surprise us with something very soon.
Undoubtedly, real-time data, especially in the InsurTech, and as we write about InsurTechs and fintechs as well, real-time data really is where it's at in terms of developing new products and services. So what role can AI and automation play in the development of new products and services, as I was just mentioning, and how is automation changing processes such as underwriting? And Timothy, what's your view on that?
Well, I think that this question around real time and this question around data analytics and AI, it all kind of has as its end goal to have some more parametric type of insurances. So it's like you say, if we can somehow detect the house is on fire, do we still need to have the client go through a claims process? Can we just not pay him a house and pay him a hotel accommodation automatically? I mean, this is very far future thinking. In a more practical, more today example, you could think of stuff like the classic example here of something that already works and already exists is if your flight is delayed. If you have this micro insurance and you say, I'm taking a plane today, this is my flight, and somehow the system detects, okay, this guy is delayed, you automatically maybe get a food voucher or access to the lounge or those type of things. So that's something that's already working today, more or less fully automated, more or less fully priced based on models without humans in the loop. The question is, how can we scale this up towards bigger products like the actual car business, the actual home business? Second question is, do we actually want to scale this up? Is this something people want, or do they still prefer to have the more personal approach of talking to a human, getting advice? Should we find some sort of hybrid system in between? It's a very tricky answer because the opportunities are so diverse that it's hard to choose where to go.
Yeah, that's right. I mean, there's some really good examples there of how it's sort of being used instantaneously or in an automated way. But you're right. What's the customer reaction to essentially if their house is on fire? Are they going to be checking their emails to realize that their insurer has picked up on that and has therefore decided that they're putting in place the claims process for them? Or is it something that they'd rather talk to a person about? Obviously insurance is a very personal issue as well. Health insurance, life insurance, all of that, it can come at a very stressful time for people, and so having that, knowing when to automate and when to have that human in the loop, as you said, is a really interesting question and very important in terms of the customer relationship. But yeah, scaling up, I guess, is the challenge there for automation, and making sure that there aren't errors that are made as part of that process, because some cases are more complex than others.
Because there's also some pieces of data that are very hard to capture. For example, if a young mother with her children walks into a broker office, the broker already has some sort of gut feeling. You can call it prejudice if you want to be negative, about how these people kind of want to have their insurance, or there are questions there that are obvious, like if you see children sitting next to parents, you could ask immediately, okay, have you thought about coverage for whatever these children can potentially harm your house or your neighbors or whatever. It's a bit of the classic. But in this more digital approaches, you only see your customer through the lens of the type of data you collect. For example, you can have some very rich old guy who has been sitting in his couch all his life, and you can have a very rich old guy who has been into extreme sports lately and who started smoking because he doesn't care anymore. But on paper, these can be exactly the same person and they have totally different risk profile. And that's a very hard trade-off to make, and something we'll definitely need to gain experience on at a comfortable pace and not just try to do it for just the sake of it.
Yeah, I mean that in itself is really interesting. Doing the risk profiling in a digital way, as you said, can leave you, basically in the dark about what the actual risk profile of this person is. Someone on paper or on an electronic form can look exactly the same, and yet unless you delve further into the details about why they want to take out this coverage and what their lifestyle's like, you're not exactly managing risk well. And I guess that's the purpose of an insurance company from a business point of view. Anita, what role is AI and automation playing in new products and services at Zurich?
It's playing a huge role across the piece. And I think to the earlier point, it comes back to customer moments of truth. So it's there to support us to make sure that we invest every possible minute we can in the moments that really matter to the customer. And ultimately, by having the right solutions, we can free that time up to invest it accordingly. So if I look at our automation journey's gone from strength to strength. We've got 60 digital workers. Each one has a name, so they're very much part of the team. But they have run 1.5 million transactions this year so far and freed up 60,000 hours. That's 60,000 hours that we can reinvest and then spend on the right things, be it developing products and services, be it spending time actually with the customers and actually looking at the difference in value. Small lower end claims can be more automated. Actually, again, it frees up for the time where it needs that interaction. On the AI front, we've got some great examples actually. So we've been shortlisted for a Data IQ Award for our address matching intelligence solution. So that allows us to take in information, scan it, read it, compare to 40 million addresses in the UK, and then ultimately return external data to give us far more information about that. Equally, on the underwriting side, we've got smart intake now that allows us to point submissions in the right places for us. That's taken an underwriting process from 4 days down to a matter of minutes. But then it means that those underwriters are spending the right time on it. And lastly, machine learning has allowed us to cut down question sets from 100 questions down to 5, which means actually customers still absolutely getting what they need. They're able to get it far faster. And actually, if they need to pick up the phone and have a conversation with us, they can, because we've got the time to do that. So I think it's a fundamental part of the journey when used correctly.
Yeah, absolutely. It sounds transformative from what you've just described there.
Yeah, and we're hugely excited about it. Yeah,
and I can tell that. And Dan, what's your take on everything you've had? Unfortunately, this is our last question. So to wrap up the discussion, what do you think, Dan?
So I think there's huge opportunities out there, and I think if we remember back to the beginning of this conversation, the context is there's many insurers out there who are not that far progressed on either their digital journeys or their kind of data journeys. So we're doing lots of work, either building bespoke tools or implementing via low-code solutions. What are relatively simple either workflow solutions or automated pricing solutions, but actually what they're doing is they're replacing technology that was built 20 or 30 years ago. They're replacing Excel. And they're replacing lots and lots of manual processes, whether that be literally pen and paper, whether that be clicking multiple clicks on emails, whatever it is. So just actually focusing back in sometimes on the actual basics of a process and building a tool that automates that, obviously makes things massively more efficient. As Anita said, it gives people the time to focus on the interesting aspects of the job rather than the more manual bits. And inherently, it cleans up your data as you do it, which then just gives you so much more potential to start adding in things like additional external data and machine learning and AI, because actually you've got a solid foundation to do that.
Brilliant. Unfortunately, that's all we've got time for today. I feel as though we could discuss these things for the next half an hour. But firstly, I'd like to thank our fantastic panelists, Jantana, Timothy, Anita, and Daniel for a really interesting and wide-ranging discussion. And thanks to Endeavour for sponsoring this FStech webinar. Thanks so much, guys, for sharing your insights, your time and your expertise with us. It's been great having you here today, and I hope to work with you again on another FStech webinar in the very near future. Thanks so much, guys.